Yeah. And that's the done 16.6% of it. You gotta own this thing, dude. I know. Talking to me. That's scary.
You guys are supposed to let this, dude. You fucking didn't know that thing was Photoshop so stupid. No, cut me, you puzzled, dude.
I agree. I was just saying that to him. All right, good morning, everyone. Sorry. Let's kick it off. Okay, last night's session in the U.S. markets was a total non-event. We were drifting higher at the beginning of the session. Toward the end, we started to pull back, and then the last half an hour, we picked up a point or two on the S&Ps into the close. Absolute non-event again, but consolidating, above the breakout level technically, putting on, continuing to make new closing highs. At least we did in the Dow last night. That, like I said, there's not, everyone's just kind of in wait and see mode right now. And we've kind of been drifting up as that's been going on. Yesterday we did have a housing starts number, which was a huge beat, the best number since 2007. And that really got treasuries moving again. We had a sell-off in treasuries, so yields were running higher. And but they had for the first time, those higher yields had very little effect on markets. And we were seeing a real correlation, inverse correlation between the treasury yields and the S&P, and that kind of broke down yesterday. And we've had a lot of really a lot of correlation breakdowns as of late. It's been really hard to try to peg your trading with one leading indicator because it changes from day to day. We had West Texas Intermediate crude yesterday was down about over 3.5%. We had the American Petroleum Institute saying that stockpiles are going to continue to build. We've also seen some numbers from the IEA as well saying that there's going to be a ton of crude supply over the next couple of years. We had Goldman out the day before yesterday saying that their target for 2020 was at $55. So basically saying that there's not a hell of a lot of upside for crude in the near term. I think that's kind of gotten some of the maybe speculative longs out after this real nice run up that we've seen from 40 up to about $60. All right, moving on into Asia, pretty much up across the board outside the Hang Seng in Australia, just slightly down. We continue to see the metals get punished in Australia. Yesterday here domestically, every single mining stock that I had on the board was down, and down convincingly. I think the best performer was only down about 2.5%. So that just puts into perspective, what I think the extremity of those moves. Many of them down 6, 7, 8%. We also had overnight, we had Japanese GDP, which was a really nice beat. Sent the index to a 15-year high, which is interesting out of that. We also saw the yen weaken for whatever reason, but we did see the yen weaken on the back of that. So anyway, moving on here to the chart of interest of the day. We've been talking about the correlation that we've seen. Markets have really been fearing rising interest rates, and but historically, and this chart really points it out here. When you see the turn in the interest rate cycle, usually it takes anywhere from 6 months to a year for the markets to react to it. So they first start to move up in interest rates on the back of the hiking cycle is usually what the economy is still doing well, and it's a return to normalization, having rates moving higher, and everything's still okay, and the market doesn't normally panic about higher yields at the beginning. Then at 6 months to a year period, you start to see the markets start to usually react to those higher interest rates. Now, the only thing, and I hate to use the phrase "this time is different" because nothing is ever this different in trading and markets, but we've had the longest accommodative cycle in history, and every time they put the gas on, the markets just go ballistic to the upside. So I've been expecting that when they put the brakes on, markets will also have the negative reaction to the downside. It could be totally wrong because historically that's not what happens. So I just wanted to point that out. All right, this morning we had Tiger Brands out in line with guidance, right at 853, revenue at 1591, and divvy per share at 339. We knew these numbers were going to be a little bit light. I have no idea how the market's going to react to this. More or less in line with recent trading statements. All right. Like we said, we had Japanese GDP out this morning, quarter on quarter and annualized. Both numbers were a nice beat, really, I think, helping to propel the market there a little bit, but for whatever reason, taking the yen lower, not so sure about that. We've got local CPI here at 10 o'clock. We've got U.S. mortgage apps at 1. We've got retail sales here locally at 1, and we've got crude oil inventories in the States at 4:30. All right, let's get into the maps. First thing that we're going to have a look at this morning is Sasol. So I've been on this one for a couple days now. There's two charts I want to look at. So you can see it on the daily here, right? It's very clear cut. We dropped out of the head and shoulder on the daily. I'm going to show you on 30-minute because it's a little bit more, it's just a little more zoomed in version. And you can see yesterday we really dropped the neckline of the head and shoulder pattern yesterday. This is a big target to the downside. I'm personally in the camp. I hit these things out pretty aggressively yesterday. I'm personally in the camp that this thing can go quite a lot lower when you factor in what Goldman's coal was, and Goldman's coal in the commodity markets of the past 2 or 3 years have been the best in the market. They come out and say $55 in 2020. You factor that into forward guidance on Sasol, and it kills them in terms of earnings revisions. I think a lot of these guys are going to start to look at that, and they're going to start to reprice this stock. So you can see also there's also another little almost head and shoulder pattern, but another little pattern that forms at the end of this, which we've also dropped. So either way, even from the small pattern, the target is about $30 lower. From the bigger pattern, we're probably looking more like $40 lower. I would throw a target out here closer to 410, 415, somewhere in there, but quite significantly lower than the price that we're at. Just think about that over the next couple of days. I'll also show you the New York listing, and you can see here a lot of times they don't always line up so nicely, but simply because of currency issues. But you can see here also very, very clear-cut head and shoulders was dropped yesterday in the New York session. So I think every way you look at it, this thing's starting to look a little bit bearish. Full disclosure, I'm short of this thing in size. All right, let's throw out a little bit of Impalas as well. You can see here that Impala's dropped a nice head and shoulder setup as well yesterday. Or not yesterday. I mean, it's been kind of consolidating for the last couple of days below the neckline of this pattern at, I call it 65.50. And you can see here it's put in a bottom a few times at 64. We tried to drop it briefly toward the end of the session yesterday. Couldn't hang on to it. I think once 64 drops to me, the target's $60, which puts us down around here. That's going to be our target of this head and shoulder pattern. And I don't see why it doesn't get there. I think these guys are going to have to do a capital raise, if they want to develop that mine they've got in Zimbabwe. And, they're running thin on capital as it is. Not going to be a whole lot of earnings there, so I think it's in a precarious position. Anglo Gold, let's look at Anglo Gold. We're going to look here on the daily and just zoom it forward quite a bit. You can see that we've really dropped a major level at 130 as of yesterday. So we've been consolidating, bouncing around here between 130 and 140. We're going to look down to test at least to about 120 on this move lower. I think the run that we had in the gold price here maybe got a lot of people on the wrong foot in the commodity space. It's starting to feel like a real head fake, and if we drop 1,200 today, I think things could get a little bit messy. Already starting to feel like the buzzards and the crows and that are circling on some of these mining stocks, and I think it's going to get worse before it gets better. We'll look at Goldfields as well. Goldfields making a little bit of an inverse cup and handle. So, a lot of negativity I'm throwing out here in the mining space, but that's obviously quite straightforward. The thing is that they're starting to drop levels again. The patterns are starting to look right. You kind of know that the fundamentals are there for lower prices, but you don't want to get caught up in the short squeeze. All of a sudden, these things are starting to look right again. Definitely a little inverse cup and handle here, and Goldfields monster target price, hugely lower target price here. Maybe throwing it down around $32, $33, somewhere in there. And if it drops, I mean, it's got to drop here. It hasn't completely dropped the level here at around 43. If we drop 43, I think it can get down to 33. Vodacom, we'll throw this one out as well at a 2-year daily. Yesterday we came in, we tested major support at 139. We actually traded there for a big part of the day. I think that the level somewhere here between 139 and 140. We held at 140 on the close. Some people have liked the earnings on this thing. If you're looking to nibble at it, this is definitely the level. There's major support here. We've had a retracement all the way from 157 down to 139. That's your correction if you like this thing. And 139 to 140 I think would be the place to nibble. The last one that I'm going to show this morning is Sunlum. This thing was looking like it was going to fail here. We had dropped below support. We had a couple closes below support here, nothing convincing, down around $73. And it just couldn't stay below there. And yesterday we got a big reversal day, starting to look like we could trade back up, at least somewhere toward the highs if we can continue some of this momentum out of Sunlum. And that's it for today, guys. Good luck out there.